to speak about Bitcoin in a way that I believe will help people understand one basic fact that everyone should be aware of, is that everything goes to zero against Bitcoin. And it's mathematically guaranteed to be correct. All you have to do is understand a few ideas to understand that everything goes to zero against Bitcoin. And that's like saying gravity is real, the sun comes up in the east, the wheel is irreproducible discovery or invention of something that's worked brilliantly for thousands of years, right? You're just stating the obvious truth and the irrefutable truth.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Max Keiser shares his new crazy prediction for Bitcoin and why he thinks that we are still early in the Bitcoin adoption. Max believes that every other asset will go to zero against Bitcoin. So without wasting any time, let's dive into the video.
You look at the charts of the entire industry, and as you point out, this is going to be my fourth halving. And they all eventually go to zero against Bitcoin. So will Ethereum. It's taken a little longer, but it's you look at a chart of Ethereum price and Bitcoin, and it's crashing. Okay, that's my answer. It's already crashing, and it's going to go to zero. And the market values and relative market values, you have to price everything in Bitcoin to get a clearer picture, which clearly you have not done, Luke, because you're asking me the question in fiat terms. And this is a Bitcoin interview, okay? Trading in the shitcoin space is no different than gambling, okay? So they're gambling, and people love to gamble. And the people who promote those shitcoins know that people love to gamble. There's a place for that called Las Vegas or Macau in China. And you may or may not know this, but the casino industry knows this. The emotional kick, the emotional high from losing is greater than winning. People who win at the casino, they're like, oh, that's cool, I won. And they get a little bump of endorphin. But when they lose, it's much bigger bump. They suddenly are the star of a psychodrama of a man who's losing money at the casino, and his wife is leaving him, and his kids are starving, and it's so dramatic, and they're so important to this whole scheme of things. And so that's what the shitcoin appeals to gambleaholics. So they're not investing, they're not participating in Bitcoin. They're just gambling. Now, when you say I'm gambling in the shitcoin market so I can buy more Bitcoin, okay, go to Las Vegas and 1,000 people on the floor of the slot machines are all telling you that, oh, I'm going to use my winnings to buy a new extension on my house. My winnings. My winnings. Right? But those 1,000 people are all losing. They lost 1,000, then they made $5. They're like, I'm a winner. I made $5. They're like, you lost $995. They're like, no, I didn't. No, I didn't. Right? They're not well. So you can't gamble your way to making more money. And everybody thinks that they can. But again, that's the opposite of being humble and stacking sats. Right. That's the opposite. It attracts the fiat mentality. It attracts the gambleaholic. And that's what drives the prices of that total shitcoin casino. So those people, I always see them on my timeline. I send them a link to Gambleaholics Anonymous or to Shitcoiners Anonymous, which is a 12-step program I developed for shitcoin addicted shitcoiners. The first step is to admit that you're a shitcoinaholic, and admit to Satoshi that you need help. Go to a Shitcoiners Anonymous meeting. Come to El Salvador and make amends to me personally, and I will baptize you in the Pacific Ocean if you're lucky, and maybe you can be reborn as a proper Bitcoiner. But don't try to argue with me that your gambling addiction is in some way helping you or anyone around you.
Bitcoin's price drop coincides with a lackluster response to the market debut of spot Bitcoin and Ethereum exchange-traded funds, ETF, in Hong Kong, and the growing stagflation fears mount in the U.S. The continued stalling of flows into the U.S. Bitcoin Exchange-Traded Funds (ETF) are also exacerbating the downward pressure on BTC price. Bitcoin has displayed unprecedented price action in 2024 by hitting all-time highs before the halving event. This has left market participants wondering whether the flagship cryptocurrency has reached its top. Currently, BTC price is trading 17% below its all-time high and has dropped 7% since its supply subsidy halving on April 20, and some analysts are now convinced that the cryptocurrency will descend into the low $40,000 range. In comments on X on April 29, independent trader and X-user Ali attempted to decipher whether the BTC price had reached a market top. He drew comparisons to previous halving cycles, when spikes in Bitcoin realized profits have historically coincided with market tops. Referencing Glassnode data that showed that when Bitcoin hit all-time highs on March 14, realized profits skyrocketed to $3.52 billion. Ali noted that similar levels were observed during the 2021 bull market. Before calling a market top, the trader said he was waiting for another confirmation involving a sustained close below the BTC's short-term holders' realized price. If the market top is confirmed, $BTC could drop toward $51,530 or even $42,700. Bitcoin has defied its history by turning down after its 2024 halving, but independent analyst Rect Capital suggested that the drawdown remains an important part of a classic bull market setup. In a chart uploaded to X, he compared the current BTC cycle with previous halvings, saying that the price behaved in exactly the same way, even producing a downside wick below the range low. According to Rect Capital, the BTC price is currently in a reaccumulation range that usually develops before the halving, with most of it forming after the halving. The goal now is for Bitcoin to move sideways to catch a breather, for the market to cool off after fantastic pre-halving price performance. He further explained that the range concludes with a breakout from its several weeks and even months after the halving.
The use case for Bitcoin is, and I mean, this could get into the broader argument of getting back to the history of Bitcoin, and this is the epoch, because remember during the earlier epochs, there was this idea that Bitcoin needed to handle more transactions and needed to be faster. It's a medium of exchange, and this is what Satoshi wanted. And then that's an interesting sidebar that I have a lot to say about as well. But so against all these fiat money, it's already increasing its purchasing power against all this fiat money quite aggressively. And so anybody who would want to protect their purchasing power of having an asset that is going to allow them to go into the future with their purchasing power intact and even enhanced, there's no better answer than Bitcoin. Nothing comes close to Bitcoin to maintaining purchasing power and increasing purchasing power into the future. Nothing comes close. I mean, gold is kind of the nearest cousin to Bitcoin in the physical world, and it will continue to outperform gold very dramatically. It's outperforming property. I think part of the reason the property market is collapsing is because people are moving money into Bitcoin. The ETF market and the attraction of Wall Street obviously is adding another huge pool of capital into Bitcoin. It is decentralized. People say, well, the ETFs make Bitcoin less decentralized. That's completely false. We can get into that, but that has nothing to do with the centralization or decentralization of Bitcoin, because the decentralization aspect of the protocol speaks to the consensus, the underlying consensus mechanism that's proof of work and not proof of stake. So it doesn't matter if Larry Fink has 300,000 Bitcoin. He cannot change the protocol. He has no influence over the protocol, no more influence over the protocol than if this person with 5 Satoshis. So there's an incredible democratic appeal right there. It's a meritocratic appeal. So the decentralization of Bitcoin keeps getting more decentralized because you get more nodes.
From a technical point of view, Bitcoin's price was sitting on immediate support from the 100-day exponential moving average EMA at $59,944. Losing this support would cause the price to drop from the current levels, collecting the demand-side liquidity below it toward the 200-day EMA, currently sitting at $51,900. Such a move would represent a 15% decline from the current levels. The 200-day EMA also aligns with Bitcoin's horizontal support zone between $50,000 and $52,000. This support, after being held in February, preceded a 42% surge in price to all-time highs. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.